Everyone, this is Brad Matheny. Today is Saturday morning, April 12th. This is an early morning. Sun's not even up out here in California, but this video is really more of a thank you to everyone. This week and basically the last month or two, I have seen an incredible boost and growth in the engagement and the context and the communication with people on TradingView and other sites where I post some of my information. But seeing as though this is a TradingView video, I really want you guys to understand that, it's wonderful to hear of your success stories, and it's wonderful to hear from you and to be able to help you in some ways understand what's going on and maybe provide a little guidance. And it's ultimately what I'm trying to do. Is I'm trying to, as I've been telling you, teach you guys how to become better traders, or try to. Now again, I'm not 100%. I'm human. I try my best. I give you the best advice. I use my tools, my cycle patterns, and my research, and my in fact, that's what I'm doing today. I'm doing a bunch of research. So I think I can show them to you here. I mean, these are all of my new custom charts. This is the U.S. valuation chart showing we've got a breakdown monthly. Here is the FANGs index chart getting a big recovery. Here is the commodity gold chart showing a moderate recovery. Here's the valuation chart. I showed you that already. Here is the fear index getting a big breakdown. The sentiment index is recovering. The custom cash flow index has had a big recovery. A lot of buyers moving back into the market last week. The U.S. leading index, again, similar to the cash flow index, big recovery. Accumulation phase index, we're still in bearish trending. That hasn't changed. I don't think it's going to change overall. I'm going to show you a little bit more here. Innovation index is kind of building a nice base bottom. So we're going to be looking for some possible growth over the next couple of weeks in innovation. That might be a good sector to be keeping an eye on. Devaluation cycle phase chart shows extreme devaluation in the market. Very undervalued market right now. And I believe this is going to take a while to recover. So we could be struggling near these lows. We come over here. We have the market rotation index. Big recovery last week, back below this low level here. I believe we just continue to consolidate downward. I don't see any real impetus for growth in the market. Smart money index, I haven't put this one together yet. I forgot to label it. This moves us back into trending. This was when I called the top. You can see here the top actually set up right here, basically right on this first bar right there. And we've rolled into this topping pattern. We're still in this topping pattern. We have a fairly deep move here, but we're not out of the woods. We're still in topping downward trending. Base trend index, I don't think I've done yet. I got to remember to do those. Commodity to deflation index, quite a bit weaker. And the QQQ index is seeing a big recovery. Now, this is buyers in the U.S. U.S. buyers loaded up on the NASDAQ and QQQ last week. Big recovery, okay? Overseas, not so much. So this is a scenario here where overseas traders were really running for the exits, whereas U.S. traders had seen an opportunity and jumped into the market. Okay, so again, all of this research, including my extended patterns here, my cycle search here, my extended patterns here, and all the other data, this is what keeps me informed. Okay, and you guys, like I said, you guys are really only seeing a part of it every morning when you come over here. What I actually deliver to my subscribers, which thank you, some of you are becoming subscribers, is that I deliver a full spectrum analysis report of what's going on, keeping everybody informed. So what I'm going to do is I want to highlight this. You see this big ugly blue line here? I know it looks like, I drew with a big old marker right across the top of it, but this is kind of what I expect. And I'm going to come over here to this chart and show you the setup. So we're talking about an excess phase peak pattern setting up, rolling through this pattern. So we come across here. Sorry, start over. Come across here. There's our flagging. There's our breakdown into consolidation, and there's our breakdown to the ultimate low. So there's our ultimate low. Okay. Do this again so it's cleaner. Breakdown, consolidation, breakdown into ultimate low. A little better. Now, invertedly, okay, we have a breakdown here through this inverted cycle phase pattern, which is a breakdown into this area, moving up that I believe will consolidate back into this area, flagging, then breaking upward into a consolidation range, and then move upward into potentially an ultimate high. So now here we have our ultimate low based on the excess phase peak pattern. Here's our ultimate high. Mark this as ultimate low. Here's our excess phase peak pattern here, the bullish one in blue. Here's our bearish one in red. Now, if I consider this secondary one as a peak up to here, rolling down, flagging through here, and I'll consider this second bullish phase here as an excess phase peak pattern, a bigger, broader excess phase peak pattern. Then we move into consolidation here through this area. So I need you to understand how these excess phase peak patterns are starting to stack up and how they're starting to play out. Okay. The ultimate low pattern from the blue excess phase peak, I'll mark this in blue and this one in red, is playing out that we should get a recovery. And I believe the recovery is going to come in the form of potentially running right across a channel like this, down to potentially into this lower channel. Or again, I really believe that we could be moving in kind of a megaphone type pattern like this. Okay. So where we're at with this megaphone type pattern is if we move up back into this 548, 550 area, stall back out, which is the high right here. That's the high level right across the consolidation level. In fact, let me get rid of that and mark the consolidation level because the consolidation level is actually quite important. I think it's going to play a very important role right out here in the future. So where we're at with this is if we move back up to that 550, 545 area, the consolidation low over here is actually a little higher, right in that area, 548, 549. Then what we're going to do, guys, is we're going to see the market roll up like this. I'll try to draw it in a smaller shape. It's going to roll up from this low and then consolidate, roll down, and then possibly move up into this area, consolidating. So now pay attention. Here's the next move of the SPY, potentially moving back into this consolidation, potentially setting up a very wide range move in the SPY. This is by no means a buy trigger, okay? Because we then move into, and again, I'll redraw this, it's a little too long. We move up into this area, flagging back down, up into this area, consolidating. Remember, got to remember to mark it an early May low. So again, right here, draw it again, up into our early May low, down here, rolling up into our May, June area, And then as we move into the end of June, we move back down into a July low, and then maybe roll back up here into our August, September low, October, back over here. So what I'm trying to show you is this is kind of the general trend I expect, having the October low be the real ultimate low right over here for us to be able to buy. And this is an intermediate low level that you could get into early buying. Now, the 440, 420 area, I've talked about how Fibonacci wise, we're looking at a pretty big breakdown. So when you look at measuring trends, and I'll make this bright red, and we measured trends downward in full Fibonacci 100% moves, you can see that we get down into this 420 area fairly cleanly right across here. And then we move across this 480 area, 483, right across here. And we move across this lower area, 549, right across there. So you can see how price, it will struggle to stay in this area potentially over the next 4, 5, 6 months. And I don't believe we're going to have any real big opportunity for buying until we get down to this October low. So do not, in my opinion, do not consider trying to, make big investment decisions until out here into August, September, October low. I'm hoping that that's actually the low that I predict is going to happen. Now, this red pattern, you ask yourself, Brad, but you have this right up here. Yes, I do have that right up there. That is a completed upward movement of this bearish, the red inverted excess phase peak pattern. But I don't believe it's going to work. I think it's going to invalidate right here and try to move down. And that's going to be technical invalidation. In other words, it's going to move up into consolidation. It's going to reach the consolidation phase, and it's going to roll down to a new low here, possibly down even further, 440, 450, 460. I don't believe it's going to finish out into this ultimate high. And again, any one of these excess phase peak patterns can invalidate. So let me show you. Okay, here's a bunch of excess phase peak patterns going up. You ready? I'm just going to do the big ones. Excess phase peak pattern invalidates higher. Excess phase peak pattern invalidates higher. Excess phase peak pattern invalidates higher. Excess phase peak pattern invalidates lower or validates lower. And again, rallies up, excess phase peak pattern, invalidates higher, excess phase peak pattern, invalidates higher, excess phase peak pattern, invalidates higher, excess phase peak pattern, invalidates higher. You see, they happen all the time and they invalidate perpetually. That's what happens in trending. So at this point, this breakdown pattern to the low, and then the bigger purple pattern here, which is now in consolidation, I believe we could see this consolidation range move into kind of a bull trap right over here, a kind of let's call it a testing zone before breaking back down to the downside with these lows. So ultimately, guys, I don't see any real buy opportunity long term till we get out here into October. And remember, this is pretty much the same drawing here. We hit the low, we'll pull back up. We come down to the July low, we pull back up, we come down to the October low, which is a little off over here. Should be right over in this area. And that gives us our kind of our zone. Okay. Kind of gives us our zone for what's going to happen. I think we move up moderately, quite volatile, maybe some big rotation. We find a peak, maybe 450, 440, roll over, retest these lows, come back down to 450. Sorry, this is 540, 550 up here. Come back down to 450, 460, 440, maybe lower. into the 425.30 area, rally back up into the 500 area, and then move back down into maybe the 400 area, setting up a double bottom before we get out of it. But again, I will give you updates every day with the cycle patterns, what I think is going to happen, so I can try to assist you. And really, this was a lot of people are asking me, Brad, what do you think? Brad, what do you think? Brad, what do you think? And, this is it. This is daily. This is kind of what I see happening. I see this red inverted phase pushing the markets up a bit and then moving downward over the next 30, 40 days, then moving upward a little bit more up into this 540, 550, 560 maybe area, then invalidating through this consolidation phase and breaking downward. Okay, it invalidates with a downward move to a new low, must get below this level in order to invalidate. Must get below that level in order to invalidate. That's the 480 level. If we're going to get below that level, that means we're going to be dancing around 440, 450, 460. Then I think we get a little bounce back up into this consolidation range, setting up again. Look at this, guys. A new excess phase peak setting up here. Try to pick a different color. And then that sets up a breakdown into consolidation back over here. And again, may not be that long. I'll draw it again into our October low before we try to invalidate all the way up into the rally that I'm expecting in 2026. So again, what do I expect? Here you go. This is a general outline for the SPY, QQQ, and Dow Jones Industrial. And remember, guys, I'm going to try to guide you through it. I'm going to try to provide context, tell you what I think is going on, make sure I don't run out of time, and keep giving you the information that you need. Now, remember, I'm not 100% accurate. Neither are the cycle patterns. If it was, if I was 100% accurate and could predict the market accurately 5 years out in the future, trust me, I'd be off on like my friend says, my secret island with my secret lair and all my computers and rolling in dough like Scrooge McDuck and not even caring what anybody does. But like I said, I think I'm on the path to unlocking some of the secrets of the market. I think it's very important to get feedback from all of you. And I think it's very important to push myself even further so I can continue to unlock these things and help teach you guys how to do this more efficiently. And remember, I really appreciate all of you supporting my efforts and helping me out and, making sure that I can continue to do this and deliver success for you. Like I said, I don't know. Hopefully, I'm okay with this. This is Matt. He just wrote, "Thank you for your comments and support this week and the advice to take a pause. I just signed up for your service. Blah blah blah. What a steal! I'll be trying to further utilize your wisdom and expertise before re-entering. I finally came to terms that I need some guidance, and thank God I stumbled onto your videos on TradingView. Thank you for all you do, Brad. Have a great weekend." Okay, that is the whole purpose of what I'm doing. Okay, I am tired of watching people get scammed. I'm tired of watching people blow money on some guy who thinks he knows what he's doing on the internet, me included. And I'm basically trying to deliver, you know, far greater value for you than you've ever seen in your life. If I can help you make 300, 500, 1,000% a month or every couple of months, let me tell you something, guys. That's going to be the best uh, solution you'll ever find because I'm doing it pretty much for free for you here on TradingView. And like I said, I appreciate all your support. I appreciate your comments. But remember, this is all about delivering success for you so you can learn to be a better trader and continue to use the right tools. Okay, guys, thanks a lot. Ended my video. I'm going back to work.